Beyond the hype, BYND's fight for survival in a market that stopped believing let us be real. Beyond Meat, BYND, was once the poster child for the future of food. But when the hype faded, it got ugly. Sales tanked, partnerships dried up, and Wall Street labeled it a failed experiment. Yet here we are in late 2025, and the ticker's starting to show signs of life again. So what's the real story behind this comeback? First, let's break down the fundamentals. BYND's biggest weakness was always its cost structure. Making fake meat that tastes like real meat isn't cheap. The company spent years bleeding cash. Gross margins fell as low as 4% in 2023. But in 2025, BYND quietly flipped that back into the green, reporting margins nearing 15%. How? Two key moves: automation in production and a complete overhaul of its supply chain logistics. They switched to regional manufacturing hubs, reducing shipping costs by nearly 30%. It's not flashy, but it's smart, and it's working. Meanwhile, demand isn't dead. Despite lower grocery sales, BYND's international revenue grew over 20% last quarter, driven by Europe and Asia, where plant-based meat is still booming. Governments in the EU and India are offering subsidies for sustainable protein companies, and BYND is sliding right into that wave. Add to that a new line of hybrid meat protein blends, part plant, part real meat, aimed at flexitarians, and you've got a realistic strategy, not just a dream. Now, technically, the chart is looking juicy. After months of consolidation around 750, we're seeing higher lows forming, a bullish wedge breakout pattern. The RSI is holding near 65 with increasing volume over the last 6 sessions. The MACD is crossing upward, confirming momentum. If BYND can break resistance at 980, the next target zone sits near 12 or 50. But if it fails that breakout, 680 becomes critical support. Translation: we're at the crossroads of either a rally or another rug pull. Here's the kicker. Short interest is still sitting around 37%. That's massive. When you combine that with growing retail chatter, it's the perfect recipe for a short squeeze. But don't confuse potential with certainty. BYND can still get crushed if volume fades. This is a momentum-driven stock, and momentum never sleeps. So how do you play it? You can scale in small, protect your downside, and trade the volatility rather than the vision. If you're looking for sympathy plays, watch TTCF, Tattooed Chef, another turnaround story in food tech. ADM, the quiet giant of protein innovation. BGS, B&G Foods, a low-float value stock that sometimes moves in sync with food sector speculation. Beyond Meat isn't back in the traditional sense. It's fighting for its life, and that's when the biggest market moves happen. Traders love desperation plays with real volume behind them. Investors, on the other hand, will have to decide if this is a long-term rebound or just another dead cat bounce. One thing's for sure. If BYND clears that $10 mark with conviction, the same traders who swore it was dead will be the first ones FOMO buying at the top. So stay sharp, manage your risk, and remember, in the market, narratives die hard, but revivals pay harder. Like, share, and follow for more breakdowns like this and Don T. Forget to join the Discord to catch the next potential short squeeze before it even trends.